So in this module, we're going to be talking about the foreign exchange market. So what is it? You see, traders, the foreign exchange market is where currencies are traded on. Now, currencies, as you and I know, is the paper cash that you and I trade for to get and buy our physical products. Now, these currencies, it can be anything, right? It can be the euro, it can be the sterling, our pound, it can be the Japanese yen. So any types of currencies, and they usually are traded in pairs. Okay, there's usually, when you look at any symbol, there will usually be two of them. Much more of that later on. And usually these currencies in the foreign exchange market, they are traded in an unregulated market. Okay, unregulated. Now, what does that mean? So unlike the stock exchange, where it's traded through regulated, that means through one central body, this is done through different banks, so you may have different data feed. That's why sometimes the prices that you get may differ from broker to broker. That's why we say unregulated. And finally, some of you may be wondering, okay, have I really traded in this foreign exchange market or not? You know, I can guarantee you that almost all of us, 99.9%, have traded in this foreign exchange market. The reason why is why? Because all of us have probably, and most probably, have gone on holidays, right? So when you go on holidays, what naturally happens? We exchange our home currency for the foreign currency so that we can then spend in the country that we are going on holiday in. Now, the market size and liquidity of the foreign exchange market. So you see, traders, actually the foreign exchange is the largest financial market out there compared to all the other markets. If you look at all and compare the daily turnover of the foreign exchange market compared to the commodities or the stock or whatever it is, this will be the biggest one. And guess what? I'm just going to tell you that. What is then the daily turnover of this market? You won't believe it. It's 5.28 trillion. Okay, 5.28 trillion with a T. Okay, not going to B, it's a T. And how much is a trillion? It's 1,000 billion. Can you imagine how much money that is? And that is the amount that is being traded every single day in this big, massive market. Now we move on to price increments. Now, what is the smallest price increment in the foreign exchange market? So as I've mentioned before, in the usual economic transactions that we do, that is going to be 0.01, okay, and that is what we call a penny, okay, 0.01. I've mentioned this in the previous videos. So what that means is that the smallest price increment that anything can have in this external common transaction reward that we do is only by 0.01, and that name over here in the UK, we call it that a penny. And in the US market, you may call it cents, and in other markets, different terminologies. But the price increment is always 2 decimal points. However, in the foreign exchange market, the smallest price increment, just as this, is 4 decimal points. Okay, 4 decimal points. That's the smallest you can move by. And the terminology that we give to that is what we call the pips. Okay, percentage in points, if I'm not wrong, is what we are talking about, and that is what we call the smallest price increment in the foreign exchange market. Okay, now we move on to our next video, which is our next market, since we have covered on what is the foreign exchange market, the market size and liquidity, and also the price increments of that. Now we move on to the next market, which is the crypto market.
We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.